Hi, everyone. This is Helen from SMB Deal Hunter. With me today is Elyse Gonzales, who is Vice President of SBA Lending at Live Oak Bank. And we're going to be talking about all things SBA when it comes to buying a business. So, Elyse, it's great to have you here.
Yeah, it's great to be here. Great to chat with you. I'm always happy to be talking about SBA lending, so it should be fun.
Yeah. Well, first, I guess, Elyse, can you introduce yourself and tell us a little bit about you and Live Oak Bank?
Sure. So I've been doing SBA related lending for the last 15 years. Live Oak Bank is the number one lender of SBA loans in the country based on dollar size. So the most dollars lended in the SBA world. And I'm in Phoenix. We lend nationally. We have people all over the place, both generalists like myself and people in specific industries. So we cover a lot of territory.
Awesome. Very cool. Well, I have a bunch of questions today, so let's dive right in.
Great.
I guess one of the first questions I have is when thinking about getting an SBA loan, one of the first things people ask is, would I qualify for an SBA loan?
Yeah, so I think specific to, people in your group, SBA loans can cover a lot of things, but I think you're talking specifically to acquisition. So we'll kind of focus on that. It's hard to gauge qualification because a lot of the qualification is based on the business that you're buying. And oftentimes you're just out there searching. You don't necessarily have a business. So on the personal side, I think it comes down to experience. So do you have direct industry experience in the industry you're looking to buy? And if not, do you have some relatable experience that you can come in and kind of take this business to the next level? So that's kind of number one thing is you need to have some experience and some level of knowledge in the industry. And then the down payment. So typically, on an average acquisition, when you're coming in from the street buying a business that you found, we like to see 10% down. So we want you to have that 10% of the total project cost. And then, we don't want to leave you with nothing. So we've got to take into account, what it's going to take to run the business, what it's going to take, for you personally to live while the, transition happens. So we definitely need that 10% plus, those things. And that is a really good baseline. So that when you're searching, you know what you qualify for. And then you can get the lender involved or whoever involved to look at the, financials of the business and qualify on that side.
No, that's super helpful. What types of businesses generally qualify for SBA loans? Are there businesses you really like providing financing for, or that you avoid altogether?
Yeah, and this can be really specific to a lender, but really from an SBA standpoint, any bankable for-profit business qualifies under the SBA loan program, and then lenders have, specific guidelines within their credit policy. At Live Oak, it's really case by case basis. There's only a few industries that we wouldn't lend to, and logic would prevail there. But, independent restaurants can be challenging. We look at those through a little bit of a different lens. Trucking can be really challenging, anything where there's, commodities and cost changes. And so, you know, construction, if there's a lot of, new home construction, things like that. So there are, little details and nuances in certain industries, but, overall, it's pretty broad.
Got it. Got it. No, that's very helpful. And in terms of the loan size, you mentioned putting 10% down. With the SBA, I believe there's a $5 million limit to the purchase price or size of loan I can take out to buy a business. Is that correct? Can I buy a business larger than $5 million? Can you speak to that a little bit?
Yeah, so the SBA does cap out at the $5 million mark. We do have options where we can do conventional financing on top of that, for the right borrower, for the right business, up to about 9.5 million unsecured. So if you did go above that 5 million, theoretically, we could do maybe a 7-year conventional loan on top of the 10-year SBA loan to get above that $5 million mark. But the SBA overall, yes, is capped at 5 million, when you're looking at one purchase.
Got it. No, that's super helpful because a lot of people think that they can only look at smaller businesses, but it seems like, there's some conventional loan options that may work for them. So that's definitely worth exploring.
Yeah.
I'm curious, I guess, in terms of what size business, someone can afford to buy, what do you generally like to look at to determine that?
I think it's back to, the 10%. So, we want you to have some skin in the game to come in, with 10% of that project and again have some left over. So, some businesses, require a lot more working capital than others. Some people require a lot more personal capital just to keep up, their lifestyle. And so I think it's really kind of case by case, on the person, but that 10% down would give you a good indication of, where you're at.
Got it. And I guess with that, what can I anticipate loan terms to be like, or what are the rates like?
Yeah, so the term is pretty standard, on an SBA business acquisition, they are typically 10 years, fully amortized. So that doesn't change, if you did put the conventional loan with it, there are typically shorter terms. But rates are very broad. A doctor buying a practice is going to have a much different rate than someone buying a business that would be considered, high risk, and maybe they don't have direct industry experience. And so, I always tell people when they're modeling, if you use the maximum, the prime plus 2.75 max, or even, some lenders will go up to 3, that'll give you a good indication, and then you can go from there.
In terms of structure of the deal, what types of structures does an SBA loan support? A lot of people like to use seller notes, earnouts, rolling equity. Can you speak to that a little bit?
Yeah, the SBA is a little bit prohibitive on, some of those structures. So earnouts are not eligible, rolled equity, rolling from one company into another is not eligible. So, we are pretty stuck with the seller financing piece, and kind of structuring around that. But depending on the cash flow of the business and how you're using that seller note and what you're trying to mitigate, that's where we really have some flexibility. We can build in rebates, we can build in performance-based covenants. Sometimes that seller note can be used as equity in certain cases. So that's where the flexibility really lies.
Got it. Yeah, no, sounds like there's some room there to be creative. I guess, with a lot of deals that people are looking at, some brokers say that a deal is SBA pre-qualified. Does this mean that, someone who's looking to get an SBA loan should only look at these opportunities, or what does that really mean when it's pre-qualified?
I think it's really hard to tell what that actually means. I mean, I don't think because it's not in a listing doesn't mean that it's, not SBA eligible. I've seen that in listings where it's not SBA eligible. So they've determined that, some way. I would definitely pay attention to that, or, in certain cases they don't want an SBA lender for whatever reason. But the pre-qualification is so subjective and is probably using a hypothetical scenario. So I wouldn't limit that. And I also would probably do my own due diligence based on my own scenario with, my lender, just to get a second set of eyes on it. But it's really hard to say. If it's pre-qualified, by Live Oak, typically that means that we've, gathered the business financials and done some due diligence there. But again, on the personal side, we would have had to plug in some kind of standard metrics. So I would still dive in.
Yeah, no, that's super helpful because I get a lot of people who email me and are like, I love this deal, but it's not SBA pre-qualified, so I can't go for it. It sounds like, definitely something that is potentially subjective and, maybe just because it's not listed as that doesn't mean that it can't be SBA eligible.
Absolutely.
And in terms of personal guarantees, with SBA, should I anticipate a personal guarantee? What does that look like if I'm getting a loan for business
The
acquisition?
SBA requires a personal guarantee. So I would say always in every scenario, I would expect a personal guarantee.
Got it. Moving on into sort of the process, what does it take to get a deal to closing, getting an SBA loan with you or maybe with other lenders?
Yeah, I think that in my process, there's really 3 steps. And so closing's kind of the last step. So the first step is that due diligence, piece that we talked about, digging into the initial SIM and the initial financials and just kind of figuring out what's financeable, what the equity requirements are, if there's any seller financing, are they going to build in any working capital? Do we have to worry about inventory? There's so many things that are so subjective to the business that you are looking at buying, and so much work that has to be done just to get everybody on the same page, that for me, that's the longest part of the process, is just getting everyone on the same page, and really getting as detailed of an LOI as possible, so that the next step, step two is underwriting. But theoretically, if we've, done our due diligence in step one and everyone's on the same page, we should just be dotting I's and crossing T's and double checking financials, the things that, we didn't do, but we would assume would check out. And same with closing. Closing is really documentation focused, and, things that have to be done to make the transition happen easier. And so, those are things that are pretty straightforward and can be pretty streamlined, especially if you are working with a lender that knows what they're doing, and you have a team of advisors that knows what they're doing. And so, that should be the easy part. It's that first step that, is time consuming and could potentially happen more than once, because, a lot of people don't buy the first deal that they dive into.
Like, no, that's for sure. I guess, with that three-step process, when would someone who's, looking to get an SBA loan engage you or an SBA lender? Do you want someone to have an LOI? Do you want them, when they're looking at a sim, or, yeah, at what point does it make sense to engage you?
I think the sooner the better. So, we have a lot of resources at Live Oak while you're doing your search. We host office hours every Tuesday that will just sort of give you another lens to look at the project through kind of the bank lens. So I would recommend, talking to a lender right away, having an initial call, joining that office hours, getting some tools for your search. And then, you can do your own due diligence. You can, sort through Sims and decide if you want to move forward on a project. And if you do find something where you're, going to enter into an LOI, at that stage, we would re-engage and kind of look specifically at that project. Whereas the first contact is just some tools to help you search.
Got it. That's super helpful. In terms of the process, what does the timeline look like? How long does it take? Can you break that down a little bit? And I guess more specifically, I'd love to hear sort of what slows things down or speeds things up, that you've seen based off your experience.
Yeah, I mean, what we can control is kind of underwriting and closing. So underwriting typically takes, 2 weeks. Closing typically takes about 30 days. Our average is about 42 days from underwriting to closed loan. But again, that's because we've put so much into the first step of that process, and we're not going into underwriting unless we really, believe that this is going to close. And so that process can be slowed down, by the sell side. You don't have control over how quickly they're going to get you financials, how accurate their financials are going to be, how many times we're going to have to go back and forth. That's out of our control. But if you have a team that is comfortable in the industry and is prepared, that's the best thing you can do on your side. Connect with Key Man Life Insurance, other insurance, business insurance, any third party that you can engage prior to will help speed things up on your side.
Got it. That's super helpful. And in terms of, the time commitment from the searcher side, what can you anticipate on that?
I think that's entirely dependent on the searcher. There are people that spend 100% of their time searching. There are people I talk to once a week, as they're searching, and there's people that are doing this, nights and weekends and when they have time. And I maybe talk to them, once a month or once a quarter, and they'll find something eventually. So it's entirely based on the searcher.
In terms of the materials that you need to see, or that a searcher need to prepare, what does that look like?
Yeah, again, it can be really hard because most of what we're looking at is on the business you're looking to acquire. But, having a basic financial package together on yourself personally is a good place to start. 3 years of tax returns, the SBA personal financial statement. And then, we use a form called the personal information form, which really just kind of sums up your background, your resume, anything that would be pertinent to this in your background. So that's a good place to start with me, at least.
And what about on the business side? Are there any specific materials? I guess it would mostly be financials. Do you require folks to have a quality of earnings done on the businesses, anything like that?
Yeah, I mean, we sort of have the same, outline that we would ask for if you were, looking at a project, 3 years of tax returns, interim financials. We'd want to know about any, top 10 customers to see any customer concentrations, ARs, APs, kind of your basic financial package, maybe a SIM if they have one. As far as the quality of earnings, it's definitely down the road, definitely depends on the size of the project, the complexity of the project. Some people choose to do it regardless, and that's okay too. But not typically something we get right out of the gate unless it's a more complex project.
Got it. That makes sense. I guess moving on in terms of lenders like you, or someone searching for a business, how would you go about evaluating an SBA lender and thinking about picking one lender over another?
I would start with the rankings and kind of specific to your project and your size range. Every lender, has their specialty. So I would start there, and you could probably pretty easily drill down based on your location and the top lenders there, and then based on maybe the size of the project. And then just call, because I think you'll really quickly get an idea of kind of what they're about, and what types of projects they're looking for, and you can ask specifically related to changes of ownerships. And I think that would get you everything you need, is those two things.
Got it. I guess in terms of, I've seen a lot about updates to sort of the SBA rules and regulation a couple months back. What does that mean for someone buying a business? Can you sort of sum up what those changes were?
Yeah, I mean, there was a lot of changes, and it made things a little bit more complicated because it's a little less straightforward. I think where I've seen the most opportunity in searches is, allowing partial buy-ins now, because it can mitigate licensing issues, it can, mitigate exit planning issues, and it's just allowed for a lot more flexibility and freedom in the industry. I think all of the other changes are really case by case, and can be, more difficult to work with than, it seems like. But I do think that that change is definitely the one that's allowed the most flexibility.
Got it. Okay, cool. That's super helpful. I guess last question, if someone wants to reach you, what's the best way to go about doing that?
Yeah, I mean, I think that if you're really just kind of out there looking, definitely LinkedIn or Twitter is a really easy place to just kind of look at some posts and, what I've done, and get a really good idea of what we do here at Live Oak. And then, specifically if you want to join office hours, those are every Tuesday. Those, provide a lot of tools. And then of course, email and phone, I'm always available, and can find those on LinkedIn, or I'm sure I can give them to you and you can blast those out. So always available.
Awesome. Okay, I guess we're just at about time here. It's been great having you, Elise. I certainly learned a lot. I'm sure a lot of folks that are going to be listening to this will feel the same way. Really great having you, and thank you so much again.
Absolutely. I had a great time. I always love talking about deals and projects and SBA. So looking forward to continuing to work together.